Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So today's usually a prepared report. This report puts some remarkable things. So mostly we see the wide revision of the forecasts for United States dollar among the big houses. So we have the changes from the Goldman Sachs, UBS, Deutsche Bank, Credit Agricole, and a lot of others who suggest different targets above the market. So obviously there are fundamental reasons for that exist, and many of them we consider in our report. Also, we explain why we in general suggest this point of view. So maybe we're not speaking about too far targets, but at least as you will see, the 123 target, 120 target seems very probable. Mostly because the big changes that started in the global economy and a mutual relation between United States and counterparties, they can't be stopped in the blink of an eye. This is big fundamental changes. And all of them will have some momentum, especially when you have the deteriorating situation in the United States finances. As you can see from the statistics, you have really, well, maybe not the problems, but you do not see some kind of the lack of the achievements, lack of the success in all directions that Donald Trump trying to follow concerning the savings in the budget with the Donald Trump Doge project. The actually lack of success in the Ukrainian battlefield, lack of success among major counterparties in the trading of the Japan and the China. Actually, that's the two countries for whom the overall idea of the tariffs have been invented. It's not because of the Canada and Mexico or even Vietnam, although Vietnam is also a big part of all this stuff, but Japan and the China. And they can't achieve the agreement with them. So also this progress stumbling here. So other reasons as well. So some problems inside of the team of the Donald Trump. First is the attack on the Powell, then the release on the Powell, and so on. And as more time will pass, as more emotional and nervous will become the Donald Trump. His first term has shown that he's really showman. He's a performer, so he can't. Well, this is that epitaph is some kind of his character, and he will start tweeting more and more and more, bringing more cash. And as time will ticking, the closer he will come to the intermediate elections in the houses. This will become in the next year. The first 100 days in the post brings nothing except maybe some destruction of the existed structure of the finance and the global finance in the United States. So this is the reason why we think that the tendency that we see on euro currency has good chances to continue, if even we treat it as a retracement. Although currently it has signs not of a retracement, but maybe starting with the new direction. But if even we treat it as a retracement, it has chances to reach high standing targets. And in the beginning of the video, I would like to start from the monthly chart. We rarely take a look at the monthly chart. But here we could explain why different big houses suggest these targets. Particularly speaking, let's start from the UBS. They talk about 123. 123 seems very simple to explain. It's actually 618 resistance of the whole downside action. We're now speaking only about the technical background. Maybe they will have some fundamental calculations, explanations, but by technical reasons, this is the 123 is a 618 major monthly resistance area. which also agrees with the OP. OP stands slightly lower as 119. That will be next destination cluster. Speaking about the 130 that the Deutsche Bank suggests in the perspective by the end of the 2030, this is actually the next larger scale of the upward direction. Very probable, since this will be agreement resistance, and the market already now stands at the overbought, so maybe the overbought will stand here for months. So it might be real big reasons for pullback and forming on the right arm. And if we suggest this type of action, then a simple calculation of the A, B, C, D will give us the 130 area. Another reason, if we suggest that something big will happen, for example, I do not know, the United States will start the quantitative easing, and we will have straightforward upward breakout. In this case, in the shape of the butterfly, for example. In this case, the extension of this swing, XA, will give us 127 around 131. So we have two different shapes, but they point on the same direction. That will stand on the technical background of these targets. Reason for the pullback on the technical side, beyond of the strong resistance area, it might be also take a look. It might be got steeple to sell. So retracement here is quite possible. If even it will be slightly smaller, maybe not as deep as these lows on this shoulder. That in two words, what we have. Here's, by the way, you can see the pivot points also stand. So market, for instance, could retest them if it will happen this year. So, but you can see that from the technical point of view, even fundamental suggestions of the big banks also might be justified with the patterns that already stands in place, mostly already stands in place. That's what we have on a monthly chart. Now let's go down to the daily, what we're going to do in the beginning of the next week. So first thing that I think that's really important is the performance on the daily and full time frame chart. If you remember, in the beginning of the next week, not just the beginning and half of the previous week, we dedicated to analysis of the possible hand shoulders pattern here, and we suggest that 1250 seems really nice for possible considering taking the long position. But now I would say that we should not be hurry up with the taking the short position here, because the shape of the pattern, shape of the market is changing, and actually you could see that incompleted head and shoulders is now becoming the new kind of the classic pattern. So we have seen it many times in the recent few months on the different markets, Forex and gold, even on the Bitcoin. So, and it's becoming the new so-called, maybe we could call it already as some classic price performance. The same shape you could see on the Great British Pound. What does it mean? It means that currently we could get not the background for a deep retracement, but we could get the background for a possible challenging of the previous top once again. I wouldn't say that it will be direct straightforward breakout now for continuation, because market stands at the overbought on the monthly and the weekly chart. Actually on the weekly we have currently the shooting star. But in the current moment, maybe this combination will fail and triangle will be broken. We will see. But at this point, since we have the shape in place, I wouldn't consider taking the short position until I see this type of action, because no one bearish market will behave in this way. This is not normal for the bearish market, especially when the OP has been completed. So yes, I could accept retesting of the OP, grabbing the stops around it, some wash and rinse and collapse. But this should trigger the downside continuation is in the way of the double repo pattern. Now we do not see it. It means that the performance is not bearish. The same on the fall time frame chart. You could see the hand shoulders that we were considering, but market stuck somewhere in the middle and is not completing it, just standing sideways. The best bearish scenario we already discussed on Friday, and it has the shape of the butterfly. So if it will be completed, then we again start speaking about the hand and shoulders. But for now, with the performance that we see, chances stands that probably market could start upward action. That's why we call to not really be hurry up with the taking the short position here. Despite that we have the divergence, but this is just one of the possible patterns. this type of the performance not good for a bearish pattern. On an hourly chart, speaking about this butterfly, just to complete this topic, and if you still would like to take this risk, maybe you have that different view on the current situation, or just ready to take this risk, this is probably not bad setup in general. I wouldn't say it's stupid or theoretically could be taken. But if you would like to take it, keep an eye on the 114 area. This is probably the last point where the bearish scenario could be realized. So market has to start downward action somewhere from until it stands below the 114 area. If you will see the breakout, here you have some space until the validity of this butterfly, and in general that we're speaking about. But that will be another sign that is not bearish. So if you would like to take the short position, the 114 area that you need to keep an eye on, your stop will be above this area. So somewhere between 114, 114.40, you have to decide. But something tells me that if market will break the 114, here's might be some acceleration. So it will mean the failure of the short-term bearish setup and confirms our suggestion maybe that overall situation is not bearish. But if you still would like to take the part with it, that's the point that you could see and could watch, and actually that the pattern that you also could take into consideration, which is the Gartner's triple to sell. So that and towards what we have as a bottom line, we're not really accelerating our desire to take the bearish position. We are waiting, be patient, watching for performance of the market around 114 area. Still, those who would like to, you could try to use this step that we have on hourly chart. For others who do not want to do this, we just sitting on the hands and waiting confirmations for possible breakout to the upside and actual confirmation of our suggestion that market is not bearish. Conversely, if we will see still, and bearish will be right and we will be wrong, we will see still the market will drop and complete the butterfly, we'll return back to the idea of the hand shoulders. In this case, we start watching for right arm and so on, the same routine that we usually do when we deal with the hand shoulders. So that's our plan for next week.